Hey everyone, it is Julie here with TipRanks. With the holiday season fast approaching, today we're taking a look at 4 major retail stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Now, I don't mean to stress you out when I say that the holiday season is fast approaching, but it is. We are just a couple of weeks away from Black Friday, which will kick off the shopping season as we head into December. So I figured it was a good time that we take a look at 4 major retail companies, what their stocks have been up to lately, and how Wall Street is weighing in on the stock's future potential. Before we get into those, this is your friendly reminder to make sure you've downloaded the TipRanks mobile app so you can access all of your favorite investment research tools on the go. Links will be in the description down below. Now let's jump right into these retail stocks. We are going to kick things off today with TJX Companies. Their stock trades under the ticker TJX, currently priced at $90.91 per share. They have seen some steady growth this past year, up 28% in the last year and 5.8% in the past few months. The stock also pays a dividend, currently at 1.38%. TJX Companies is the name behind retail stores like TJ Maxx, Marshalls, HomeSense, and Winners. They are a leading off-price retailer of apparel and home fashions in the US and worldwide with over 4,800 stores. They'll soon be sharing their third quarter report on November 15th. This follows their Q2 where they did come out with an earnings beat, and the CEO made comments that Q3 was off to a good start. For their third quarter, analysts will be anticipating earnings per share of 98 cents, and this is an increase from last quarter where they beat earnings expectations at 85 cents per share. The company also increased their full-year outlook in that quarter after they saw their Q2 overall comp store sales increase 6%, well above the company's plan. Their CEO and president commented that the third quarter is off to a very strong start and we're seeing tremendous off-price buying opportunities in the marketplace. We're in an outstanding position to continue shipping fresh and compelling merchandise to our stores and online throughout the fall and holiday selling seasons. And Wall Street analysts seem pleased with that previous report as the stock currently comes in as a strong buy with 19 current ratings. With 17 buy ratings and 2 holds, the average price target of $100 would be an upside potential of 10.5%. Down below, we can see some recent ratings coming in October with upsides of 10 and 21%, the rest getting back closer to that last report. On the low end, we have a hold with a slight downside of 1% and a high-end price target with an upside of over 21%. Of course, we can't talk retail stocks without mentioning Walmart. Their stock trades under the ticker WMT, priced just shy of $165 per share. And their stock chart here looks fairly similar to TJX, seeing some consistent growth this past year, up over 17%, up a few percent in the last 3 months. The company does also pay a dividend with a yield of 1.38%. Now, Walmart is the largest retailer in the world. Today, Walmart operates more than 10,500 stores and clubs in 19 different countries around the world. Their 2022 retail revenue came in at $600.9 billion. Their next earnings report is also coming up soon on November 16th and follows an earnings beat back in August, where they saw a big increase in e-commerce. For their Q3, analysts will be anticipating earnings per share of $1.50, and that's actually in line with last year's. But looking back at the last few quarters, they have been coming in with some notable earnings beats, so hopefully we'll see the same next week. In their Q2, they reported earnings per share of $1.84, beating estimates by 13 cents per share. That e-commerce grew 24% globally, and revenue grew over 5%. Their president and CEO noted that they're in good shape with inventory and that they like their position for the back half of the year. The Walmart stock has attracted 30 current analyst ratings, coming in as a strong buy. The average price target for the stock comes in at $180, which would be an upside of over 9%. Down below, we can see we have a handful coming in here in August. On the low end, a hold rating with a slight upside of under 2%, a lot more in those mid-teens, and a high-end one with an upside of 27%. Looking back to some price targets from August, we do have a lot in those high single digits and a low end with a hold and a fairly flat price target. Next, we're taking a look at a stock that has been having a tougher go this year. That is Target. Trading under the ticker TGT, they're currently priced at $111 per share. This is down from a 52-week high of $177. The stock has fallen 28% this past year, including 15% in the last 3 months, and they do also pay a dividend with a yield of 3.9%. Target operates more than 2,000 stores, but they have been facing some challenges this past year, including weakening demand and increased theft. The company does employ more than 400,000 team members, and 75% of the U.S. population lives within 10 miles of a store. But just over a month ago, they did have to announce that they were closing 9 different stores across 4 states due to rising theft and organized crime. So the Target stock has been facing several headwinds. Now they will be reporting their next quarter on November 15th. Where analysts will be anticipating earnings per share of $1.47, actually a decline from the previous year, and you can kind of see that reflected in the charts here that those earnings have been coming in lower. However, in their last quarter in Q2, they did come out with a solid earnings beat with $1.80 per share. But with this Q2, they said that given the recent sales trends, the company did lower their full-year sales and profit expectations. Management said as we move into the fall, the team is gearing up for the biggest seasons of the year with a focus on continuing to serve our guests with newness throughout our assortment. At the same time, we continue to take a cautious approach in planning our business and therefore adjusted our financial guidance in anticipation of continued near-term challenges on the top line. So it's possible we may see some more downward movement before Target finds its bottom, and this is reflected in our analyst outlook as well. Ratings are split between buys and holds. Coming in as a moderate buy with 14 buys and 15 holds, the average price target of $144 does show some optimism for recovery with an upside of nearly 30%. Down below, though, we can see a real mix between buys and holds, pretty much every other rating coming in as a hold. On the low end, we do have some price targets down in the single digits with an upside of 4%, but some more bullish outlooks as high as 60% upside as well. And to wrap things up, we have a massive online retailer on which all analysts agree, that is Amazon. Trading under the ticker AMZN, they're currently priced at $139 per share. The stock has seen growth of over 53% in the past year, but is fairly flat the last few months, down just 2%. Amazon has 310 million customers worldwide. And despite some macroeconomic headwinds, Amazon's Prime Day this year set a U.S. sales record of $12.7 billion in sales. So it comes as no surprise that Amazon will account for nearly 40% of all U.S. e-commerce this year. They just shared their Q3 report on October 26, where they came out with a pretty notable earnings beat. For their third quarter, they reported earnings per share of 94 cents, coming in well ahead of the 58 cents anticipated, and they saw their net sales increase 13% to $143.1 billion. They said between their AWS reInvent and their 29th holiday shopping season, this is a particularly action-packed time of year at Amazon, and we're excited for what's to come. Now, when I said that all analysts agree on this stock, I really meant it. There are currently 41 ratings on Amazon, and every single one comes in as a buy. That strong buy rating comes with a price target of $176, which would be an upside potential of 26.5%, and plenty of ratings coming in following that last earnings report. Many of them north of 20%, some as high as 47% upside. Trying to find a drastically low price target here. We have some around 12%, but I think pretty much all double-digit upsides potential. Oh, we have one low-end price target here of 4%. So that is a quick look at 4 retail giants and what Wall Street analysts are predicting for their stock's future. Let me know which one out of these 4 catches your eye the most in the comments down below. I always love hearing from you guys. And of course, keep in mind that these videos are never a suggestion to buy or sell any specific stock, just sharing with what those Wall Street analysts are looking at. So please make sure you always do your own research and due diligence. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.